General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. I believe the idea played out, but the execution wasn't there. 5, 15, 25. I believe it's consumer sentiment tomorrow. Forex Factory. Okay, what's this? Is this the second window? Yep, it is. $10 a.m. University of Michigan consumer sentiment. I've never seen it print good. It's usually red. CME Fed Watch. Today was PPI, so it should be an interesting day on the Fed Watch. Okay, 91% chance, no change still. Matter of fact, let's go back and see. Came in, retail sales came in lower than expected. PPI minus. Yes. You got red prints. Um, 91% chance of no rate hike. Tomorrow's Friday. It's never good earnings on Fridays. Ever. See? I mean, it's better than not having no earnings at all, right? So we can be like, oh, this is a terrible company. They report earnings on Friday. But some traders don't report earnings at all. No important market movers for NASDAQ on Friday. I think the next major print or major earnings release will be Nvidia. Dollar on the daily, still in this accumulation. Oh, wrong button. This one. Still in this accumulation. We could even take Wednesday's high as daily buy side liquidity since it's a daily level. But and then close below this up candle. The main thing we need as confirmation is a close below this up candle. Below this up candle. So we sit on our hands until then. Today for NASDAQ. Everything's lining up for the sale. This target hit. We respected that weekly order block, also that 2025 open price. It took forever to get here. It's Thursday. Like, you can one shot one kill on a Friday, true. But target hit. And a nice reaction for a sale. Weekly. Let me take this off. Oh, really? Yeah, just for the sake of having it clean. That was that weekly high we took. This is EQ of a weekly fair value gap that's still there, but this is going to be the focus here. Let me see if I can put a circle on it. Let me make this circle a little bit more lighter. Hold on, that's the trend line. Or, yeah, I think I got it there. Maybe 15, maybe 10. Okay, let's just try 10. Let's take off the border and see if that helps. Okay, I like that. I kind of like that. Let me double check this level though. Okay, it is the open price, not the wig. Sometimes I use the wig. No reaction at the weekly order block. I want to see sales here. I want to see price sell from here. Been hunting the sale all week too. Hold on. This just this interval only. So that way, okay, we here. I'll take this off. This 2025 open prices. We still got this flat bottom here. No, we did not close. We failed to expand here. Perfect market structure. We took the high and did not close above it. So this is sale confirmation. Let's go to the H4. Yeah, I still like this is my first target. Looks like we closed past 50% of this. I don't think we need to take more highs. We actually closed at 50% of this. Price closed at 50% of this up candle. So I don't think we need to retake this high. I'm looking for internal range liquidity runs or continuation setups like sales above Asia high. If Asia don't just rip down. Either way, I'm bearish for Friday. Let's capitalize Asia because I type fast and put an apostrophe here. Now autocorrect, I wouldn't mind if it autocorrect the stuff that it learned that I just don't do. Because I don't like autocorrect. Like when it just spell it high, we think this what you're trying to say. I mean, it's cool, but I can take this whole line off. Because these gaps, this new day opening gap held it. We wigged here. We can take this off now. This was interesting. We didn't hit this BPR. Like that'll be best possible price and best possible price for me. It doesn't need to be balanced. So this is actually the internal range liquidity here. We already took this daily high. This would be my target. This is Monday EQ. Oh yeah, I was looking at that. This kind of already got used. Facing liquidity be my second target. Don't need Monday EQ. And this new week opening gap. It needs attention. See all this sell side liquidity I got marked down there? We could just rip Everybody's like super bullish. Oh, the market, the sentiment, the greed. But from an algorithmic perspective, in order for us to go higher, we need to run. We need to stop hunting some of the buyers. So where are their stops? Definitely here up under this imbalance. So far target, but it's doable. 21, 114, 50 is my target. $21, 114, 50 is my target for Friday. Alert set above internal range liquidity. That's the best possible place. Best possible trade location to look for sales. Let's go here. Export. Add this to the Telegram journal. All right, that's that on that. Y'all have a good day. Peace.